Hey there future investors, welcome to my channel, where we'll go on an amazing journey into the world of investing. With just $3,500, I'll be starting my investing career from scratch in 2024. Though it's just a little step, I'm determined to make it a huge leap towards financial independence. And I do hope that parts of my 2024 financial journey helps you too. Over the last decade, I did all I'll be sharing in this video, and in more to come. And my invested portfolio passed $100,000 in 2023. I want you to be able to achieve that too. Are you ready? I know what you're thinking, why am I starting over when I've saved over $100,000 already? Here, I want to demonstrate a realistic and useful method for you. I want to demonstrate that anyone can start investing no matter where they are financially. So let's dive right into it. As I said, I've set aside $3,500 to kickstart this journey, and my focus will be on low-cost index funds. Why index funds? Because they're a fantastic way to invest without the need for extensive research on individual stocks. This strategy saves time and reduces the risk of picking specific stocks. Investing can be streamlined with index funds, eliminating the burden of selecting specific equities. Here's the short version of the story. Let's say you invest some money in an index fund. That money doesn't just sit there, it goes on a shopping spree for you. How? Investing in companies that make up a specific index like the S&P 500 or NASDAQ 100. It resembles purchasing a small amount of everything. Consider the S&P 500 index. It monitors the 500 largest stocks in the United States stock market. Investing in an S&P 500 fund, which is quite common, is akin to riding along with the performance of a diversified collection of businesses. The cool thing about index funds is that they're all about that diversification game. Since they aim to mimic the holdings of the index they're tracking, they naturally spread out the risk. No need to stress about one company tanking your entire investment. It's like having a financial safety net. And guess what? Market indexes have a decent track record. Take the S&P 500 for example. Sure, it has its ups and downs, but historically it's given investors an average annual return of nearly 10%. So when it comes to index funds, think of them as your investment buddies, making your money work smarter and keeping risk in check. So imagine you're into investing but could be more into micromanaging every move in the market. That's where index funds come into play. They're like the laid-back, easygoing cousin of mutual funds. Now, mutual funds are like the A-list celebrities of the investing world. These managers are deciding where to put their money, all in hopes of beating the market. On the other hand, index funds are the cool kids who simply want to match the market's moves. That's why they're called passive investing. And here's the kicker. Since index funds don't need someone babysitting them daily, they come with lower management costs, aka expense ratios. You know what that means? More money in your pocket. Compared to their active counterparts, mutual funds, index funds are like the budget-friendly option of the investing world. Think of it this way, the money you save on fees for an index fund over a mutual fund, that's cash you're keeping for yourself in the long run, helping you grow your wealth bit by bit. Here's a neat trick. Regularly investing in S&P 500 index funds is a smart move for long-term investors who use a dollar cost averaging technique. It's like building a little money fountain that progressively fills up. Smart, right? First, index investing is a stress-free approach to increasing money without worrying about ongoing management. It's like sitting back and watching the magic happen while your investments care for themselves. Now that we've talked about it, I'll give you a monthly update on my investing experience so you can see my portfolio and development. You'll witness the ups and downs, maybe we'll all learn something helpful. One key principle I'll be following is the power of compound interest. Have you heard about that before? So you know how they say money makes money, and the money that money makes money. That's the essence of compound interest. It's like a money-growing party in your savings or investing account. Picture this, you've got some cash parked in a savings account or invested somewhere. Compound interest is not just about the interest on your original amount. Nope, even your interest earns interest. It's like a snowball effect for your money. Let's get real with an example. Say you stash $1,000 in a savings account with a 5% annual interest rate. In year 1, you earn $50 in interest, making your new balance $1,050. In year 2, you earn 5% on that larger balance, which is $52.50, giving you a new balance of $1,102.50. See the pattern? If you're patient and leave that $1,000 in the savings account for 30 years, with a consistent 5% annual interest rate, you'll end up with a whopping $4,321.94. Now that's the power of compound interest over time. But here's the thing, compound interest isn't just about growing your money, it works the other way too. If you have debts, compound interest can make them balloon over time. That's why it's crucial to understand the game you're playing. Now, if you're into numbers and formulas, there's a compound interest formula, but don't sweat it. There are online calculators for that. Remember, the higher the interest rate, the more you earn or owe. Starting amount, compounding frequency, time, and money moves, whether deposits or withdrawals, play a role in this financial symphony. So in a nutshell, compound interest is like your money's secret growth formula. Gaining insight into the workings of this world's eighth wonder can help with wealth development and debt management. I'll put down a percentage of my monthly income regularly to take advantage of the compounding effect. This implies that the initial investment and the cumulative gains will increase my money. Recall that the key is to spend time in the market rather than timing it. Consistent, disciplined investing is the secret of consistency, and I think that long-term gains may be achieved. Speaking of disciplined investing, here are some habits that can help you achieve your financial goals in 2024. Putting the past in the past, here's what you can do. Alright, let's chat about reviewing and revamping your financial game plan. It's like a year-end report card for your money. First up, reflect on the past year. Ask yourself these. Did you crush your financial goals in 2023? Are you keeping up with your debt payments? And if not, what's your game plan? Is the interest on your debts eating away too much of your hard-earned cash? What's in the spotlight for improvement in 2024? Are you ready to tackle your 2023 taxes? Now onto the spending scene. Folks, it's time to kick the habit of wasteful spending. Create a budget that's as realistic as your favorite TV show. Track your spending habits, save those receipts, record them, and review them weekly. Identify spending patterns and adjust them accordingly. Consider financial apps for tracking, but skip the ones with monthly fees. Saving more and spending less is like a financial workout, so you want to identify spending leaks, those sneaky expenses eating away at your budget. Keep an eye on your spending, don't let it outrun what you're making. Try a no-spend day, a financial diet to control spending. If you're in debt right now, that's okay. Assess your debts and find areas to free up money for financial freedom. Pay off high-interest debts first to save more in the long run. Or start small. Knock out the smallest debts first for that motivational boost. Finally, for the sake of this video, pay yourself first. Learn to do it already. This is a financial strategy that's like having your priorities on autopilot. This method is all about stepping back and seeing the grand scheme of your financial landscape. Instead of waiting to see what's left after the bills, you prioritize your goals. Remember, your financial journey is unique. Tailor these strategies to fit your goals and lifestyle. A bit of a disclaimer though, this is not financial advice. These are only the lessons I've learned in my journey. So if you're ready to embark on this financial journey with me, hit that subscribe button and let's build our wealth together. I'll share tips, insights, and updates on my investment progress. If you have questions or topics you'd like me to cover, drop them in the comments below. It's time to turn our financial dreams into reality. Stay tuned for more episodes. Until next time, happy investing.